Well, you're right. You won't pay $500. You'll pay $1,500 and you'll be happy about it because it's a computer. And so I remember actually being back at Craig McCaw's house in Seattle for an event. He's a big investor in the early days of cellular. And I asked his family office guy, do you think the mobile net is going to be as big as the internet? He's like, Mark, are you joking? Ask me if they want a computer. Like, yeah, whatever. Ask them if they want a phone. They're like, I already have two. I probably don't need another one. Yeah, the mobile net's going to be bigger than the internet. And so Web 1, right, made $2 trillion of value. Microsoft, Intel, et cetera. Web 2, okay, Amazon, Google, Alibaba, right, made $5 trillion.
The CIA Project, a group dedicated to revealing secret US intelligence agency projects, released a video claiming the NSA created Bitcoin. The group's main claim was that Satoshi Nakamoto, the mysterious creator of Bitcoin, created Bitcoin. Since no one has met the sued person and there is no conclusive way to identify them, the film claims that Satoshi could not have maintained that level of anonymity without intelligence training. Tatsueki Okamoto, a living cryptographer who wrote a 2007 study on peer-to-peer systems, has also been mentioned. The NSA may have known about his work and been motivated to build Bitcoin, but these hypotheses have been disproven many times. Known hedge fund manager and Bitcoin enthusiast Mark Yusko believes that even if these claims are true, Bitcoin will not be harmed by the inventor's objective. In a recent interview, Yusko suggested that the NSA may have backed Bitcoin because the powers that be realized the dollar was dying and wanted a replacement that would still be under their control. He also noted that Bitcoin has no backdoor, but he is not sure the same applies to other cryptocurrencies that are more centralized. We will share clips from the interview as Yusko discusses the doomed state of the modern monetary system.
Went to business school, took a job in an insurance company, was managing traditional investments, bonds, and then got a job in an equity firm. And then I got the call to go back to the alma mater at Notre Dame and learned all about the endowment model of investing. So that was where I spent what I call my chapter one, working for not-for-profits, first at Notre Dame, then down here at University of North Carolina. And the whole idea of investing for a big institution is it's all about diversification. It's all about this, integration of alternative investments into portfolios. And I always say whoever invented the term alternative investments, Ben, was not a very good marketing guy or gal, right? Because people don't like alternatives. They like traditional stuff. They want to put alternatives in. And my big thing is alternative to what, right? What is a hedge fund? A hedge fund is just a legal structure that allows you to own a stock, a bond, a currency, or a commodity. Well, what about private equity? It's just common stock, preferred stock, convertible bond. Well, what about commodities? It's a commodity, right? There are only four assets, traditional assets: stocks, bonds, currencies, and commodities. And so all of this discussion of these other things really never made any sense to me. So our tagline at Morgan Creek is alternative thinking about investments, not alternative investments, alternative thinking. Think differently about how you take advantage of long time horizon, for example. The one true source of alpha in the world is time horizon arbitrage. Well, what does that mean? Well, most of us, all of us actually, we're human, we're going to have a finite life, but institutions live forever. Endowments, foundations, pension funds don't live forever, but essentially, multiple generations and multi-generational families can pass wealth on. And so they get paid a little extra something called the illiquidity premium for all of us that need to put our hands on our capital, convert it to spending money and buy stuff. And so really that's where I spent most of my time in the traditional world. But about a decade ago, I got introduced to this idea of digital assets and blockchain technology. And why does that matter? Why is it important? Well, I was really lucky. I lived this life that happened to coincide with the information age, right? The mainframe computer was invented in 1954, even before I was born in 63. But my dad sold and installed big mainframe computers into corporations. Because before that, right, there were no computers. Government had computer, but companies didn't have computers. And then in 1968, there was a innovation down in Silicon Valley. I grew up in Seattle, Washington. There was a little innovation down in Silicon Valley called the microchip. And suddenly you could make computers that weren't as big as a building, but were only as big as a room. And now mid-sized companies could have computers. And then there was an innovation up where I lived up in Seattle around this idea of personal computers. And it's great. The founder of DEC, Digital Equipment Corp,
Yep.
in 1970 said, in 1977, there's no reason anyone would ever want a computer in their house.
Some people think that the NSA created Bitcoin so that the US government could one day take it all and use it to fix the economy. While this is possible, there is another side to the story. Someone or some group was motivated by the almost collapse between 2007 and 2008 and how central banks responded by printing so much money. They then used the crisis to make public something they've been working on for years or even decades, thinking that many people had learned enough about the trust system, which is how Yusko affectionately refers to the traditional banking system. It doesn't have to be the CIA or NSA. If you look at how much value fiat currencies have lost in the last 50 years or so, you can see that our financial system is falling apart. Let's go back to Yusko's talk.
Well, of course he said that because he made computers that were as big as a house. So he didn't think you'd need a small computer. And Steve Ballmer.
They
right?
eventually made PCs, of course.
Yeah, well, Steve Ballmer's mom famously said, honey, why would you work for that company? No one would want a computer in their house, quoting something she heard from the guy at DEC. Now, Steve has 18 billion reasons why he was right, mom was wrong. And 14 years later, and why is it always 14 years? Well, it's always 14 years because young people always invent the new stuff. Because us old people are set in our ways and we don't want to know about new stuff. And young people come along and say, well, why doesn't that exist? I'll just make it. And it's about a half generation, 14 years. And so these young people, create new stuff. And, Mark Andreessen, right, when he's 19, created the browser, which launched the internet, which was the innovation in 1996. And what was interesting is some other young guys, Larry and Sergey, had created a thing called Google. And I was sitting at Notre Dame, and we were allocating capital to venture capital funds. And we invested in this company called Sequoia, which back then was not famous. Now it's certainly famous. And they invested in this company called Google. And I remember telling our board, this is funny, told our board that we just invested in this search engine company called Google. And they said, well, that's a stupid name. Well, now it's a verb, right? We use it as a verb. Did you Google it? And what's really funny is, yes, it was the 21st search engine. There was Ask Jeeves and Alta Vista and Web Crawler and all these other things that were higher. But they didn't do what Google actually does. Google doesn't search the web. They index the web. They put all the information on all these websites and they send you to the website that they own when you ask a question. Just a better way of doing business. So fast forward to 2010 and anyway, so our $500,000 that we put into Google turned into $200 million.
Wow.
There should be a quad at Notre Dame called the Google Quad.
Absolutely.
And I had that aha moment. And it's actually my pinned tweet on Twitter, is that if you invest in innovation, if you invest in things before other people understand, that's where you create real wealth. And so in 2010, the mobile net comes along, right? And everybody's like, well, what do I need a smartphone for? In fact, when this thing came out in 2007, Apple stock went down 40% because people said, I'm not going to pay $500 for a phone. My flip phone's perfectly fine. Well, you're right. You won't pay $500. You'll pay $1,500 and you'll be happy about it because it's a computer. And so I remember actually being back at Craig McCaw's house in Seattle for an event. He's a big investor in the early days of cellular. And I asked his family office guy, do you think the mobile net is going to be as big as the internet? He's like, Mark, are you joking? Ask people if they want a computer. Like, yeah, whatever. Ask them if they want a phone. They're like, I already have two. I probably don't need another one. Yeah, the mobile net's going to be bigger than the internet. And so Web 1, right, made $2 trillion of value. Microsoft, Intel, et cetera. Web 2, okay, Amazon, Google, Alibaba, right, made $5 trillion. Okay, that's bigger. And now, 2024, we have this thing called the truth net. So what does that even mean? Well, what blockchains do is they replace trust with truth. And the easiest example is, let's say I lend you some money. Back in the old days, and I'm an old guy, so I wrote on my papyrus tablet, right, that Ben owes me money. And there was only one ledger way back then. And so you come to pay me back, and it turns out I'm an unscrupulous guy, and you probably shouldn't have trusted me, but you did. And while you were away earning the interest on that $100, I changed the entry from 100 to 200. Well, because there was only one ledger, you were stuck because you trusted me, and I'm not trustworthy. So 838 years ago, the Medicis stole a little idea from these Portuguese monks, the Knights Templar, and they said, we're going to create banking, and we're going to have two ledgers. So Ben's going to keep a ledger, Mark's going to keep a ledger, and we, the benevolent Medicis, for a small fee, will make sure that we have the ledgers match. So as long as you trust us, the banks, the ledgers will match. Well, but here's the problem with that. While you're away earning the interest on that $100, I go to the Medicis and say, you know what, guys, I'm going to change my ledger to 200, and I'll give you half.
Unlike real estate and other physical things, one of the great things about Bitcoin is that you don't have to stay in a certain country or region against strict rules in order to keep your property. You also don't have to physically and stressfully carry it around to get away from the government's tyranny. This is one of the many benefits of the leading cryptocurrency. This is why Bitcoiners keep stressing how important it is to remember not your keys, not your coins. Please share your thoughts on Mark Yo's interview in the comments section below. Also, please like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.